Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, we also have to talk about a lot of the primary market action in the equity arena. But before we get to that, let's just head over to Manisha and look at the commodity trades for this morning. Good morning, Manisha.
Morning, Surbhi. Thank you so much for that. Well, we have seen further decline come in for the crude oil prices. Remember, we are down 10% now in last 1 week itself, and yet another percentage point of decline is what you can see on your screen there. Well, it has to do with the increase in US inventories in the previous week for crude, for gasoline, etc. So there is an increase in supplies there. The US output has been maintaining at 10.9 million barrels for last 4 or 5 weeks now, but there are IEA reports suggesting that the US output will hit a record high in the month of August. You also are looking at increase in supplies from Saudi Arabia. There is a report of withdrawal of inventories from strategic petroleum reserves as well. And of course, the Libya export terminals are also back on activity. So that's taken the prices lower. Also, the long liquidation by speculators is yet another reason that you have seen the crude oil prices continue to make lower lows now for a third straight week. And it has been quite a considerable drawdown that you have seen in prices of gold and silver. We are trading at a 1-year lows in case of gold, and the silver prices as well are trading at an 8-month lows. The strength in US dollar, no physical buying, and also the fact that you are looking at stronger or rather 2 interest rate hikes perhaps coming in from US. That's what the Powell testimony is, what the markets have analyzed as, hasn't augured well for this space. So nearly $10 of a decline is what we saw in the global markets in the New York session, and we are clearly nicely trading below 30,000 rupees for the gold MCX as well. The base metal prices are quite all over the place. We have seen some bargain buying come in for those. As you can see, very flat trades coming in for that one. Still trading at the lower end of the range. But the only support that this sector is getting is from the fact that the steel prices in China have continued to gain up. And markets are also looking at higher supplies because the pollution output curbs is something that would begin from the month of November. So ahead of that, this is a bit of a buying that we have seen on those markets. So steel ingredients clearly doing quite well, and the copper prices have seen some bargain buying. So 0.1% of gain into that one as well. But then the trading strategies are quite a reverse of that, because remember, we have seen a weak economic data come in from China, and the strength in US dollar will perhaps continue to weigh on to these prices. So a sell call from KDA in case of aluminum, and 136 is the target that they're watching out for that one. A sell on nickel as well continues with 895 as the level to watch for today.
Okay, thank you very much for that, Manisha. And of course, we'll keep coming back to you. Crude down for a second day running, but it's not being the tailwind that it was yesterday. The Indian markets at the moment just maintaining some of their gains, but not able to break that 11,070 resistance, which the Nifty has been facing. And mid-caps continue with their selling. Yesterday's gain put back day before yesterday's losses, but another 0.5% gone today. With that, let's shift focus now to the IPO market. There is an interesting IPO offering, TCNS Clothing. That company's IPO opens for subscription today. Anant Daga, the managing director of TCNS Clothing, has joined us in the studio. Good morning, Anant. Thank you very much for joining us. Well, before we begin the financials and the issue size, can you just describe your company for us? What are your niches?
So good morning, and first of all, thank you for having me on your channel. We would just like to tell you about the anchor book that we have closed yesterday for the IPO. We are very excited with the names we have got. We have raised some 337 crores. We have marquee investors like Fidelity Management and Research, Goldman Sachs, GMO, Risk Capital, Axis Mutual Fund, Birla Mutual Fund, White Oak, and the likes of the same. We are looking forward excitingly for the next 3 days. In terms of our business, see, we are a business which is a multi-channel, multi-brand business. We are a fashion platform for women's ethnic wear. We have 3 strong brands, W, Aurelia, and Wishful. All these 3 brands are at different price points. They are for different fashion occasion usage and have their own TG. As a business, we also have a proven retail and product model across all geographies, all channels, all formats. I think one of the key crux in this business to scale up is to strike the right balance between creativity and commerce, for which you need a very, very strong institutional design process backed by a very strong supply chain. I think these are some of the capabilities we have. As an organization, it's interesting how we are organized. We are an employee-driven company, professionally managed company with a high equity stake, and that's what also differentiates us from other players.
So, Mr. Daga, I'll straight away cut to the chase. Looking at a lot of the analysis and a lot of the sort of IPO reports that have been doing the rounds, I think the key concern right now is that at the upper end, the asking rate is about 44, 45 times earnings is what the issue is priced at. The question is, what is going to be the strategy? Because this is not a very sticky segment. There's a lot of buying that's happening online. It's a hyper-competitive marketplace. You've been growing at about 30, 32%, maintaining margins at about 21%. What is the strategy? Can these numbers sustain? Can you even hope to improve them in a market which is so competitive and tastes are very fickle? We're women, I think we can vouch for that, Lata, can't we?
So, you know, I have someone who's wearing a western wear and someone who's wearing a sari. Can't talk about SKDs much, but let me attempt. See, first of all, two things. One, we have arrived at the pricing and valuation in conjunction with the BRLMs, and the anchor book is a testimony of where we stand. Some of the most savvy, informed investors have given a thumbs up to us. Number two, in terms of market, just to give you an idea about the marketplace, well, ethnic wear today is a $6.5 billion market, and you have 1.5 billion which is branded. It's a very fragmented market, but there are two very strong shifts. One, there is a shift from sari to salwar kameez dupatta, there is a shift from unbranded to branded. And if you look today, there are very, very few players who are operating in this marketplace. You have no foreign players who are there. It's very difficult for them to crack the Indian ethnic sensibilities. Ethnic wear is a more complicated product. Supply chain is even more complicated, so it's not a very easy business. Even if you look at national players, there are a handful of players you can count on your fingertips who have been able to build a scaled-up model. Balanced players are either regional or they are private labels constrained by their own channels. It's very easy in our business to create a boutique, churn out 2, 4, 5 pieces, but to do this business on scale is something which is very difficult. We today are the leading players, and I think it takes a lot of effort to do something like this. So I think this is where we think a huge market opportunity, the sustained growth rates in the market, followed by where we as a company stand today. I think it's slated for growth.
Okay. No, even then I would persist with Surabhi's question that your revenue growth in the last available year is about 18-19%. Even then you're asking for 44 times. And ultimately you will be looked at, I mean, while it is a niche, you will be compared with the Page, with the other products which have a proven record. So can you justify valuations like them?
So again, I'm sorry for repeating the same thing, but I think it's been arrived in conjunction with the bankers. Now talking about numbers, I think there's an impact of GST. So in GST, there is a higher rate of taxation, because of which our net sales growth looks slightly lower than what it actually is. Second, even when you look at multiples, I think we have moved to India's accounting this year, wherein there is a non-cash provisional entry against ESOP-based payments, which makes our profit look slightly lower than what they actually are. If you take that into account, you'll get a much more clear picture of P's.
The margins that you've been doing, 20-21% last few years, are those margins sustainable? I mean, what is your sort of attitude and philosophy towards pricing? Because again, hyper-competitive market with a lot of online discounting also going on. What should we expect on margins?
So there are two things. One, when
are you also online, by the way?
We are online. We are one of the best-selling brands across online sites. I think if you look from a consumer lens, a brand on basis of its consistency and differentiated product can command a price and can command a market share. And this is where we have been able to differentiate ourselves with others. In terms of hyper-competitive market, again, if you look at national level players, I don't think there's too many players. Given the opportunity and growth, we believe there's just too few players. I think there's opportunity for more and more brands to come and make a impact in this market, and that's where we see. In terms of growth engines, I think the market growth itself tends to doing more of the same and still being able to grow substantially over the next few years. I think being a fashion platform, we can also add brand, product categories, new geographies and omni-channel.
You sell through your own stores or other store chains?
So we are pursuing a growth strategy which is across all 4 major channels. So while our exclusive brand outlets contribute to about 50% of our sales, about 28-29% come from large format, 10% from multi-brand, and 11% from online and international stores.
And the last same sales growth in your own brands was, in your own shops was?
So typically our approach is a very, very product-centric, channel agnostic. So we usually look at same-store sales growth in terms of large format doors and stores put together. For the last couple of years, it's been a high single digit.
There's one concern that has been raised that in the fully diluted sort of share capital post-IPO, the promoter's stake is going to come down quite a bit, I think from 43.5% to just about 32%. What is the promoter thought process at the moment? Will they look at shoring this up in the future?
No, so just to give you the genesis of how we went about this dilution, see, we decided upon an IPO because we think it brings a lot of credibility and visibility to businesses. We are an extremely capital efficient model. We are a debt-free organization despite this growth. We have a high return on capital employed, which is about 40%. Business didn't need cash for growth. So we decided on OFS, and then it was a simple cookie cutter approach. All stakeholders are selling in the proportion of their holding. Just to let you know, even
so the money is not coming to the company, it's a dilution.
We are cash rich, debt free, and internal accruals are more than enough to sustain growth.
Fair point. Thank you very much, Anant, for joining in, and all the very best with you.
Thank you for this opportunity.
Okay, we are going to take a break and we are coming back and focusing back on results. Mr. Mahabaleshwara, the Managing Director and CEO of Karnataka Bank, joins in. Welcome back. Let's just take a very quick look at the markets. It's at the Nifty level, holding on to 11,050. So not making the transition. An early morning buy would not have resulted in any gains. But the market is not losing either. So we just have to wait and see whether it's able to make that cut beyond the 11,070-80 mark. The mid-caps are continuing to lose steam. With that, let's shift focus to Karnataka Bank. The bank posted a decent quarter with respect to asset quality, but the decline in NII growth has obviously impacted operating profit growth. Mr. Mahabaleshwara, MS, the Managing Director and CEO of the bank, joins us. Good morning, Mr. Mahabaleshwara. Can you first give us some view on how asset quality will progress from here on? Can we be reasonably assured that things will improve from here and your end of year NPAs will be distinctly lower than what it is now? Oh, we are not able to hear you, sir. We will just have to redial and get back to you. Just a word on the markets at the moment, 0.5% lower on the mid-cap index, but that's not ruined the advanced declines.
Well, I just want to quickly recap the Karnataka Bank numbers as we're trying to reconnect with Mr. Mahabaleshwara. So the point is that their gross NPA number has shown a marginal decline. It's come to 4.72. We need to get the breakup of what has happened with slippages, etc. So that's the question we'll put to him. The other aspect of the number is that the NII is up 10.5% year on year. But as Lata was pointing out, there's a sequential drop in NII. That could, of course, be a bit of a concern as well. So I don't know. Do we have Mr. Mahabaleshwara back with us? Okay, we'll just try and get back. But I guess, Lata, these are the banks that will be in focus because after yesterday's stellar show from Federal, the hope was that, banks like Karnataka, etc., will also tell us that perhaps the worst is already priced in and it'll, asset quality at least will get better from here on. Yeah, let's check out what Karnataka Bank has to say about slippages and other details. Okay, I think we have Mr. Mahabaleshwara back. Mr. Mahabaleshwara, okay, before you give us your outlook on NPAs, what is the slippage number quarter on quarter? How did Q1 do vis-a-vis Q4?
Yeah, there are two issues which I would like to share with you. One is, first I think you made a reference of about the NII as well as the operating profit. In fact, NII has shown a very decent growth of 10.40%. But as far as the operating profit is concerned, even though we had declared 19.11% growth in the operating profit, if you really look into that, there was a trading profit item of 6.25 crores during the current quarter, which was 75.28 crores about a year back. No, so really Mr. Mahabaleshwara, I'm interrupting you because, your NII did grow 10% year on year, but it is down on the quarter compared to the fourth quarter, which could be a spot of bother. Can you tell us how loan growth was, both year on year and quarter on quarter? Yeah, loan growth was 24.28%, and it is very much on the expected line. But most important thing is the operating profit. If you net off that one-off trading profit, it has really shown a 64.64% growth. So this is the real strength of our income earning assets. And as I said, we will be focusing more on the asset side growth. Slippages, can you give us? Yeah. See, slippages also moderated during this particular quarter. In fact, we had the total slippage of slippage ratio was just 0.59%, whereas this particular 0.59% was 1.38% about a year back. and had even gone up to 2.88% about a quarter back. So what I'm telling is slippage appear to have been moderated, and the credit cost also, which is presently at 0.41%, was at 0.51% about a year back, and was 1.25% during the previous quarter. So it seems that the stress appear to have been moderated, and we will be further focusing on asset quality in going forward.
Sir, just some more points on asset quality. Can you share with us details of your restructured book right now, the exposure that you would currently have to the NCLT list and the second NCLT lists, and some of these other details?
Yeah. See, restructured book almost the same as that of March 2018. We had 1,046.44 crores. Now it is at 1,045.71. But it was at 1,139.57 crores about a year back. And possibility of further addition to the restructure book is very remote. And as far as NCLT cases, we don't have any list, any accounts in the second list. Only the first list we had. And for that, the provision coverage has already increased to around 76% as of date.
Are you
in this, your gross NPA and slippages, are they likely to rise this quarter because of the Reserve Bank's February 12th circular? Are you likely to see some companies go to NCLT?
Yeah, those February 12th circular has already been factored in by duly taking into consideration the regulatory stance. And that was the reason why we have come out with cleansing of our book as of March 2018. And going forward, yes, there was a concern of Karnataka agriculture loan waiver scheme. I have already made known to all that we have already recognized the stress in this, and the provision is made as per IRAC norms only. We have not taken any benefit of this loan waiver as of now. So going forward, as and when this benefit comes, it is going to be a credit positive as well as provision positive for us. That means the provision gets released. So no much, because the impact is already front loaded as far as Karnataka agriculture loan waiver scheme is concerned.
Can you give a little bit of a forecast or a target you may have on your gross NPAs and your net NPAs for FY19?
Yeah, I have already made it known, because we are aiming to contain the gross NPAs to around 4%. With a bias of around 20 to 30 basis points, and definitely the NNPA also at around 2% with a bias of 20 to 30 basis points.
And this quarter, we have already gone through about half of the current quarter. Are you confident that the NPA will not increase and that your loan growth will remain at 24%?
Madam, this is for the current financial year. So month on month, day by day, we are looking at it, because the MSME dispensation list is one area which is really causing concern, in the sense which requires continuous attention. So depending on the government announcement as well as the regulatory stance, we will have to take a call on that. But as of now, there are no areas which are really causing concern, because we are keeping very, very tight follow-up schedule for all those accounts which have been identified as the watch list account.
Okay, thank you very much, Mr. Mahabaleshwara, for joining us. We are out of time. We leave Bazaar with markets, with a tug of war between bulls and bears, undecided. Lots of long and short ideas lined up for you on trading on Chartbusters. Thank you very much for watching Bazaar.